Okay, so you heard interest rates are going to drop and you're not sure whether to buy now or whether to wait. So let's do the math and see whether waiting will either save you money or whether it will cost you in the long run. So get out a sheet of paper. We're going to work through the math together. So if I were purchasing a home and I wanted to decide when, get a sheet of paper, draw a line down, and let's work through the math. So let's put now, and then we put, let's say 1 year from now. Let's say it takes a year to get to our ideal interest rate. So let's paint the scenario. So I am purchasing a home for $500,000. And I want to put down 5% down payment, which would be about $25,000. And my mortgage would be about $475,000, right? And the current interest rate, let's say it's 6.5%. And that would make my principal and interest on $475,000, that would make it about a little over $3,000. So we're going to just put $3,000 just to make it simple. Okay, so that's the scenario. So if I bought now, my mortgage payment would be about $3,000 with principal and interest. And let's say I'm currently renting, let's say my current rent is $3,000. Not bad, right? So I would be at a loss, $3,000. So let's say I wait until next year. So one of the things that I have to consider when waiting next year is that for the last few years, the average sales price has gone up about 3 to 4% every year. So I have to consider that that may be a possibility. So next year, let's say the value of the home, the same home I'm looking to purchase, went up by 3%. So the homes went up to $515,000. So 3%, we have a 3% increase. Okay, and so I'm still doing 5% down payment. So that would be about $25,750. And that means that my mortgage amount would be about $489, I think $250, $489,250, yeah. And let's say my ideal interest rate, what I'm waiting for is 5% interest rate. So let's say next year I hit the sweet spot, it drops to 5%. And that would mean my principal and interest would be about $2,600. Not bad. I wait a year, I save $2,600. I save $400 a month. I wait a year, I save $400 a month. Not a bad place to be. And then, okay, so $400 savings a month. So I could either buy now, pay $3,000 a month, or I could wait a year and save $400 a month and by paying $2,600 a month. Here's the other scenario. I could just wait, I could just purchase now, and then I could refinance. So let's say I'm in a position to refinance next year, and the scenario is a little bit different when I'm refinancing because I just paid a year of mortgage. So at $3,000 a month, I know the first few years, the majority of my mortgage is going towards interest. So let's say out of $3,000 a month, let's say only $10,000 went towards the principal. So at $475, out of $475, I'm down to $465 in a year. And I refinance at a 5% interest rate. My monthly payment would go down to about $2,500. Now again, this is not the exact amount. This is principal and interest. I'm just rounding up and rounding down just to make it a nice, pretty number. So $2,500. Okay, so I could wait a year and pay $2,600, or I could buy now and then refinance and pay $2,500. Now, one of the other things that you have to consider if you wait a year, I said my current rent was $3,000 a month. That means that while I was waiting a year, I was also paying $36,000 to my landlord that I can't get back. And the $36,000 I was paying towards my mortgage for that year, that went towards my principal, and now I get to refinance and get to a $2,500 monthly payment. So it really is up to you, but I would say just look at the full picture. Don't look at just waiting for interest rates to drop. Look at, well, how much are home values going up, right? One of the other things that I hear is, well, we're expecting the market to crash. I've been hearing the market is going to crash for the last few years now. So also look at where the market, where the values of the homes are going. Have they been going up by 3 to 4% a year? Are they going up by 1% a year? Are they going up by are they stable? Are they not going up at all? Like, those are things that you want to consider when looking at waiting. So you're not just focused so much on interest rate while values are going up by, 3, 4, 5%. That plays into consideration too. How much are you currently paying for rent? Can you find a home that is affordable for you, right? All those things you want to take in consideration when looking at now versus later. So hopefully this was helpful. If so, please feel free to like and subscribe.